created this channel to cut through the noise we hear in the market, and there's sure a lot of it. Here, we'll dive deep down into technical analysis and break down price action to give a clear market context. Once we got that nailed down, you'll feel more confident in your trades moving forward. I believe that understanding the market's bigger picture is a key step for traders and investors like us to not only survive, but to thrive in today's financial landscape. Now, every trader has their own unique style, like personality. Your trading strategy should reflect just that, who you are. I'm not here to change your style, but to add value by helping you understand market context, break down current price action, and throw in relevant news and data. Oh, and expect some fun educational nuggets as well along the way. To wrap it up, I'll hit you with some of the short-term forecast, because let's just be real, trading without bias is like pizza without cheese. Alright? Let's dig in. As predicted, the market was quiet just before the FOMC. Everyone was literally just sitting around waiting for the FOMC statements. When they finally dropped, we saw some action. Tested the range low on ES 5680 and then rallied all the way up to 57.55. That's a 70-point move in minutes. But don't get too excited because right after, we had 30-point whiplashes during the Q&A, only to end the day back in yesterday's range. This move has torched a lot of options trading. Premiums got fried and their time got wasted. More of the story, play the range and take profits at level. Alright, so what's next? What's coming up? Next up is the main event. OPEX. Quad witching on Friday. Quad witching is like the Super Bowl of volatility. It's when 4 types of derivative contracts all expire at once. The stock index futures, stock index options, stock options, and single stock futures. It happens 4 times a year on the 3rd Friday of March, June, September, and December. So it's special, I guess. So buckle up. So let's focus on the now. On ES futures, we closed below the daily trend line. Did it grab liquidity? Is it setting up for a reversal? The big tail on the daily is often a sign of massive selling pressure. We tagged the upper expected move today and then reversed. ES didn't hit all-time highs, but SPY and XPX did. Meanwhile, NQ closed another day above its major trendline resistance. The longer it holds above, the more bullish it becomes. Technically, we're still in this box, and within that box, we're in the lows, which means this is a great risk-reward zone to buy the dip. Again. And again. And again. My line in the sand for ES is 5680, and above that, the bulls are still in control. Alright, as for the educational piece, today I want to dive into something every trader needs to know. Liquidity grabs. These are those sneaky moves where market seems to go one way, only to reverse quickly, leaving traders who entered too early with losses. Understanding liquidity grabs can help you avoid getting stopped out and increase your chance of success. So there are 3 types of liquidity grabs: equal highs, equal lows, and trend lines. So let's break each one down. With equal highs, imagine you're looking at a chart and you see a clear level where price has rejected multiple times, forming equal highs. Traders often set sell orders or stop losses just above these highs, thinking it's a strong resistance zone. But what happened? Market breaks above those equal highs, taking out all those stops, and triggers buy orders, and then quickly reverses, trapping those buyers who thought the breakout was real. This is classic liquidity grab, where the market hunts stops before moving into the opposite direction. The key takeaway is these liquidity grabs are designed to exploit common stop loss placements, wiping out traders who were too aggressive or didn't wait for confirmation. Understanding these moves can help you stay patient and wait for the real breakouts or breakdowns, instead of getting caught in the trap. This is especially important ahead of FOMC. With the liquidity being thin, the market can whip around quickly, like we saw today. We had like a 30-point whiplash after that 70-point drop and rally. Be careful not to get caught up in these fake breakouts or breakdowns. Wait for confirmation. Alright, a little bit of forecast now. To sum it up, OPEX is the big catalyst on Friday. We're still in the historically worst 2-week stretch of the year, and today's chart gave us a huge bearish tail. But let's stay objective. Above 5680 on ES, I'm buying the dip and taking profits at every level. If that fails, I plan to take the quick loss. For NQ, range low is 19,590 for reference. To end today's video, I'll leave you with this. Know that no one is smarter than the market. Ray Dalio.